from the government, Nigeria's economy posted a modest rise in the third quarter of 2025, with GDP growing by 3.98% year on year. That's the latest figure from the National Bureau of Statistics. It shows a slight improvement from the 3.8% recorded a year earlier. The oil sector contributed 3.44% to real GDP in the third quarter. That's down from 4.05% in the previous quarter, while non-oil economy made up 96.5% in this quarter. Across the non-oil sector, we saw agriculture accounting for 31.21%, industries 15.77%, and services remain dominant again with 53.02%. I wonder if that's good or bad. Let's find out what financial derivatives company thinks about this. And we're doing this with Dr. Ifoma Nwokolo. She's the Assistant Vice President, Economic Research with Financial Derivatives Company. Dr. Nwokolo, good morning and welcome to the program.
Good morning. Thank you, Annie, for having me.
So we see services dominating again. I guess that should be good news.
Well, what it simply means is that the economy has finally leapfrogged from agriculture to servicing, leaving out the manufacturing. I'll say it's not a good trend, but I know that manufacturing is beginning to pave its way, and it has increased. It's part of the sectors that brought about growth in Q3. But before we start talking about that, I want to create some context. When we talk about GDP growth, we are basically looking at some major factors that are driving it. Even the service sector, there are major factors that are driving the output in the service sector. And those factors has to do with the PMI. We have seen that PMI has increased over time. If you compared PMI last quarter, corresponding quarter, and this quarter, you find out that in corresponding quarter, PMI was 4.9, which is below the threshold. And in this quarter, in Q3 2025, it was about 53 points, which is well above the threshold. So that's why we are seeing GDP move in the direction that is moving. Look at money supply growth as well. It has also declined massively by over 50%. When you look at Q3 corresponding quarter, you see that money supply growth was about 62.73%. But in Q3 2025, we saw that it declined to about 11.05. That is massive, over 51% decline. So as money supply growth is declining, output is increasing. So you are seeing output is increasing and there is no corresponding increase in money supply. That is why we are seeing prices taper, inflation declining, resulting to growth. Also, you look at the exchange rate. In Q3 last year, we observed that exchange rate was between 1,600, 1,500 and 1,600. 1,600, 1,700. Yes, I'm right. 1,600, 1,700. Last quarter, in corresponding quarter 2023. But in this quarter, Q3, that we are looking at, we saw that exchange rate traded between 1,480 and 1,500. So all of this pushed up inventories, all of these pushed up investors' confidence, all of these pushed up the GDP that we are seeing today. But looking at the sector as a whole, we don't want to look at just service sector in isolation. Looking at the 46 sectors that was covered by NBS, we observed that about 24 activities expanded, 18 slowed, and 2 contracted. And from those activities, I just want to briefly look at 5 critical activities. And this has to do with agriculture. When you come to agriculture, you have subsectors under agriculture. We're not looking at the contribution. Contribution is good, but we want to dive into the growth. What are the sectors that actually drive this and what is their growth level? So the 5 critical sectors I'm looking at is agriculture, I'm looking at trade, I'm looking at real estate, I'm looking at oil refining, I'm looking at oil production, and just the 5 of them. When you talk about agriculture, agriculture has four subsectors, but I'm looking at crop production, which is one of the aspects that really contributed to the GDP growth that we saw. If you look at it, you find out that why we have such growth in crop production is because Q3 is basically a peak of harvest season. So that was why we saw, if you compare it with the previous quarter, which is the preceding quarter, you saw that there was an expansion. If you compare it year on year, you see that there was an expansion. So this simply means that there was increase in output compared to money supply growth, compared to the demand. So that's why we see that prices, and if you look at prices of commodities compared to those quarters, if you look at in Q3 2024, a bag of garri was 40,000. In Q3 2025, a bag of garri was 25,000. In Q3 2024, a bag of rice was 100K. And in Q3 2025, it was 80K. If you look at bag of flour, it was 70K in Q3 24. It was 61K in Q3 25. Also, look at price of beans was 180K in Q3 2024. And in Q3 2025, it went as low as 75,000. So that tells you that Q3, we had output increased, coupled with the fact that exchange rate was quite stable, and the imported inflation declined, because what always bring about increase in imported inflation is when your exchange rate depreciates. So you are buying higher. So all of these factors brought about this decline. Look at real estate. Real estate also slowed. It slowed in preceding quarter. It slowed in corresponding quarter. What is that telling you? We're gradually going to election season. Yes, so real estate is a function of election cycle. We find out that a lot of people, when you talk about money laundering always are transferred to real estate, and this is the season where people begin to make away with the real properties they have, assets they have, in order to prepare for the election. Another factor is that Q3 was rainy season, that seasonality. You don't build during rainy season. So that was why we saw that real estate declined both in compared to the preceding quarter and also corresponding quarter. So when you also look at oil refining, we observe that oil refining compared to the corresponding quarter increased by well over 4%. And looking at it, comparing it with the corresponding quarter, it actually declined. Corresponding quarter declined, was a negative, sorry. Corresponding quarter was a negative, but Q3 2025 was 19.43. So comparing the negative we had in corresponding quarter to what we have in Q3, we had about plus 50% difference. But when you compare it with the preceding quarter, it's also increased by well over 4%. What does that
All right, Dr.
imply?
Wokolo. So while we have a lot of pluses and increase, I mean, listening to the reasons, for instance, the harvest season, the elections coming up, and someone had said that, I mean, with elections coming up, let's be careful how we celebrate inflation decline. Do you see these numbers sustainable? From the PMI, Stanbic PMI, the projection is that we're going to do 4% GDP by the end of this year, 2025. Do you see this being sustainable, looking at some of those seasonal factors that have driven it?
So even if you look at let's start with the present data that was released, it was almost at par with our projection. Our projection was 3.96, and it came out as 3.98. So a 4% increase, average increase for 2025 is also our projections. Yes, we agree to that. And what we make this time, we're going to see where Q4 is basically seasonal factors that will drive the growth. So we're going to see economic growth that will be driven by seasonality, Xmas season, and all the rest. And Q3 growth, if it will grow by 4% at the end of 2024. So if you factor it into the Q1, Q2, Q3, so definitely Q4 GDP will be growing between 4.4 to 4.6%. And that is our projection, between 4.4 to 4.6, because PMI is further going to increase because economic activities will increase because of December, and inventories, manufacturers will produce more because of increase in demand due to seasonalities.
But Dr. Nwokolo, there's also that underlining worry of the business confidence index. We've seen it reduce. I think this is the fifth consecutive month.
Yeah, business confidence is in, but you look at the pace of decline. It can be reducing, but what is the pace of decline? The pace of decline is also reducing. So it could be reducing, maybe the pace of decline will be, maybe before now was about 1 point something, but if you look at it, it's about 0 points. So it means that there is a gradual increase. Even though it's declining, the margin of decline has reduced. So we are still going to see exchange rate has been quite stable. At least I would say exchange rate is now at its fair value. That is why we are not seeing a lot of speculations. If you look at the PPP is giving us 1,160 naira per barrel. But if you add the illicit premium of 25% to it, you get about 1,300 and something naira. So when you compare it to 1,470 that we have, you see that it's almost the same. It's at its fair value. So all these things, exchange rate stability, then the PMS also, PMS price has been quite stable for some time. And what does it imply? The logistic costs have been stable, and all the rest, transportation has been stable. So this will also drive the confidence, the investment confidence.
All right, Dr. Ifeoma Nwokolo, Assistant Vice President, Economic Research with Financial Derivatives Company. Thank you so much for your time and views this morning.
Thank you for having me.